Hello, good morning. It's Nate here again from NMKL Trading Academy and continuing trading for beginners. I want to talk this morning about brokers. Okay, after we had that awesome video and that awesome training about Trading View, okay, that I pulled from the internet, and basically they went into an extensive review of getting started with TradingView. The next thing is, oh, keep in mind, TradingView is your that is your charting software. Okay. Now we got to move beyond charting software because after we get the charts set up to where we can do our technical analysis, now we're going to connect to a broker once we start our live trading. Okay. Even if you're trading with a prop firm later on and using their money instead of your money, you're still going to need a solid you're still going to need a solid broker. Okay, so if you look on TradingView, they're going to offer you 100 different brokers that you can use. Okay, this is just an example, a screenshot of what you'll find on TradingView. Like the paper trading, of course, that's their simulated demo account. That is not truly a broker. It is basically where you'll be doing most of your trading. Okay, your training. All right. Then you'll see like Ninja Trader, Forex.com, Trade of 8. Okay, these are all different futures, Forex, stockbrokers, and crypto exchanges. Now, there are some things that we really need to fundamentally talk about, even though this might be the boring stuff, but there are some fundamental things that we need to talk about that are very crucial to your trading career. Okay. Very important to understand who you need to be dealing with because these are going to be your business partners in the long run. All right, so let's talk about it. The first thing that comes to mind when you're dealing with these is what to look for. When you're starting out, your broker is essentially your business partner. Like I just mentioned, choosing the wrong one is often the first unforced error that you want to do, a trader makes. Okay. So, what I'm going to share with you in this video, at the beginning of this video, in this lesson, is what you'll need to look for in these different brokers to evaluate them, separated by specific pillars of reliable, or what is a pillar for a reliable brokerage. Okay, so very fundamental that you understand this lesson because after you get set up with TradingView, then you are now going to work with a broker because that's where you're going to put your money. That's where your safe haven's going to be. Okay. The money that you want to invest, the money that you want to put into the market. Okay. Even with, like I said, even with these prop firms that you'll be trading with, of course, they're going to give you the broker that you'll be trading on, but they are one of these brokers as well that you'll see on TradingView. Most of the time, that's Trade of 8. Okay, with the proprietary firms. Okay, so let's go ahead and do a quick deep dive into what to look for in a broker. Okay, the first thing that is really crucial and that we want to get out of the way is um, regulation. Regulation is what prevents a broker from simply just disappearing with your funds. Now, um, in the just right at the turn of the century, there was this big phenomenon of they call themselves um, binary options. Okay, either a true or false. Well, that's a 50-50, and that's basically gambling. Okay, but there was a lot of these binary brokers that popped up on the internet and they were all over the place. And 99% of them were regulated outside the United States, all except for Nadex. Okay, well, Nadex is no longer Nadex, it is now a crypto firm. Okay, but the point is 99% of them became scams or they became insolvent and just disappeared. Okay, so the first thing you want to look at is regulation. Regulation is what prevents a broker from simply disappearing with your funds. So if you were in trading binary options, you probably experienced where one of these things went off the side of the map, or you didn't get payouts, or things weren't happening appropriately. Well, there's a lot of reasons for that. A lot of it was fraud, a lot of it was insolvency. There's just no recourse. So, tier one regulators, what you want to look for is on the company's website, look for brokers um, that are overseen by top tier agencies. Okay, here in the United States, and these are government agencies, the Securities Exchange Commission or the SEC or FINRA. Usually they govern stocks. Okay, the CFTC or NFA for for US futures. Okay. If you're in the UK or if you're using a brokerage from Australia, there's the FCA, ASIC. You get what I'm talking about. Make sure that you are using a broker that is regulated for your safety. Okay. Let me just warn you a little bit about offshore type brokers. Many Forex and crypto brokers operate out of places like St. Vincent or Grenadines. Uh, and there's other places, Cyprus. While not always scams, I'm not going to say they're always a scam, but there is um, zero legal recourse if something goes wrong. Okay, if they don't pay you out, things of that nature. Okay, so verification is big, and there are websites that you can go to if you don't. I'm going to tell you, don't trust the logo on a website. Go to the government site that they say that they are regulated under and do a broker check. Search for that firm's license number. Check it out. Make sure you do due diligence because brokers are, again, like I said, going to be your business partner in trading. I only use US related or regulated brokers. Okay. If I was in the UK, I would use UK only. If I was in if I was in Australia, same thing. Okay. I would avoid offshore different brokers that say they're offshore and they can, you know, there's no regulatory commissions. All right. So keep that in mind. Now, the second thing I want to talk about when you're dealing with these brokers are fees. You need to be aware of what fees are. Okay. A new person coming into the market can always often look at the commission, but that is only a part of the story. Okay. There are other things that go into this than just commissions. There are spreads in Forex and fee free stocks. The broker can make money on the difference between the buy and sell price. Okay. So you may not see commissions, you might see a spread. So keep in mind that also is a fee that they can charge. A wide spread means you start every trade deeper in the red zone. Okay. And I'll explain that when you are in my technical course and you'll find out more. Okay. Inactivity data fees. If you don't use an account for a long time, they will go in and charge you. Okay. Especially I know they do it over my Forex account, forex.com. But that's because when I signed up, I said if there's no inactivity or if there's data fees, then I'm going to pay for it. All right. So that's in the language of the broker. Now, forex.com is a regulated broker under the CFTC and the SEC and FINRA. Okay. So you need to be worried about inactivity fees as well. Overnight fees, swap fees, these are other terms that you'll hear in if you're trading Forex or if you're trading crypto. But basically, if you hold a Forex or crypto position past market close, you may be charged interest. Okay, these are just fees that you need to be aware of. Slippage. You've heard the term slippage, or you will hear the term slippage in trading. This is a hidden fee where the order is filled at a worse price than expected because the broker's execution is slow or low quality. So, in trading, and sometimes with trading view, depending on what broker you're going through, depending on your internet speed, there could be considered slippage. Okay, so take all of that into account when you start trading. This is what you have to pay to trade. Okay. Um, Then the third thing I want you to look at is solvency or liquidity of the broker. Can they pay you? You need to know if the broker is financially stable enough to handle market volatility. You want to take these things into consideration. Solvency. This broker's long-term ability to meet its total debt obligations. A solvent broker has more total assets than liabilities. Look at their financials. Okay. A big key is liquidity. You're going to hear us talk about liquidity all the time in the market. This is their immediate ability to pay you out, the broker. Okay. If a bank run happens where everyone withdraws at once, a liquid broker has the cash on hand to cover it, do they? Okay, so you need to be aware of that. In other words, what I'm simply going to teach you is don't have all your trading money in your broker at the same time, okay? But we'll get to that deeper into trading. Public versus private. Publicly traded brokers like Interactive Brokers, Charles Schwab, must publish audited financial statements, making it much easier to verify their health. Okay. So these are all things that you need to look at when you're looking at a broker. Are they solvent? Do they provide enough liquidity? Are they public versus private? These are things to take in consideration when you're investing your money and you're putting your money in that account. Because if they close the doors, they can take your money and not have to pay you back. These are, if you're trading in the United States, not FDIC insured accounts like you would find at a bank for a savings or a checking account. Okay. So let's get that out there in the open real quick. Some other things I want you to think about when you're trading these brokers or looking for a good broker. There are some common scams that you're going to find out there, especially in the theater of trading. You're going to see different things that come across Facebook, come across Instagram, might be on TikTok, whatever. All X, all these different social media platforms that are looking to bring people in. Now, I want you to think about this. Scammers tend to thrive off of get quick emotions. If you see them, run. Okay, just get away from them. Let me give you some ideas of what those scams are. Guaranteed returns. There is no legitimate broker or AI bot um, that can guarantee 1 to 5% daily returns. Look at the key word guarantee. The market is inherently uncertain, especially in the geopolitical situations that go on around the world, like the current in Iran. Okay. So what I simply say is guaranteed returns is a misnomer. They cannot do that unless they are a fixed product. But when you sign up for these kind of firms, you have to sign up through and fill out a lot of government documentation. Okay, that means they're regulated. So be careful. All right. Um, Urgency and pressure. Now, if somebody's trying to get a hold of you and with some urgency and some pressure, only two spots left, or the price doubles in an hour, or psychological tactics to stop you from doing your due diligence, like buy now or get in now, then you need to be careful. Okay. Confident strategy. If they tell you not to mention the investment to your bank or family, they are trying to isolate you. Unusual payment methods. Okay, legitimate brokers use bank wires or reputable processors, usually Visa, MasterCard, things that are traditional payment methods. If they ask you for any kind of gift cards, crypto only deposits, or transfers to a person's name, be careful, it's a scam. Now, let me share with you something else that's out there. And I'll only take a minute to do this, but BG Wealth, be careful with that. They tell you to deposit money into an account. There's no government forms that you have to fill out. They make you put money into an account. They ask you to put money into account, and then you download their app. I've never seen it, but you download their app, and then you trade the way they tell you to trade. Um, at a certain time during the day, and they're telling you you'll make 1% profit on what you deposit daily. Now, let me just simply say that's a very big phenomenon out there right now that's getting ready to come down. One, they don't make you fill out forms that are required by the government to sign up for them with a broker. Two, they are group scamming the system. They are scheming the system. They are trying to trade, all right, in one direction as a group. That's insider trading. That's trying to get everybody to trade a big pot of money in a specific direction to try that they're trying to become their own market makers without having the proper licensing and everything of that nature because there's a lot of rules for that. It's eventually going to come down. That house of cards is eventually going to fall. They also probably are having old or new people joining the group their deposits to pay out old money. Now, does that sound like a Ponzi scheme? There's just a lot of things wrong with the whole upfront situation with it. So, okay, if you get approached by a friend that's part of BG Wealth, just be careful. Okay, I'm just saying there's a lot of different things you need to look for, and these are common scam red flags: guaranteed returns, urgency and pressure, confidential strategy, and unusual payment methods. There's a lot of other things to look for, but these are the top four that throw red flags right away. Okay. So be careful when you're looking for brokers. Now, let me just do a comparison. Usually, when you are trading stocks or futures, the regulation's usually high. Usually, the common fee is commission per trade, and then protection. You usually have your funds in a different account than what they're actually trading on. Okay, so there is segregated funds. They're not all in one account. Forex, you can see they're moderate and variable in regulation. Most of the ones here in the United States fall over and are pretty much similar to the stocks and futures, but I grouped them as Forex in general. Spread, they trade off the spread, the markup, and it varies between country on the protection of them. Okay. Crypto, it's becoming more and more regulated, but right now it's still low, and that's why I use the word emerging over there. For the common fee, it depends on the maker. There are taker fees and protection. Usually there's none because crypto is hard to track. Okay. So just be careful what you're trading with. A lot of people are trading the futures accounts on crypto versus US dollar and things like that in cash accounts, which are regulated. But anyway, just keep in mind that you know, you need to verify and validate the regulations on these things. And if you have any questions, you can always ask me in the Discord group, or definitely you can send me an email at support at nmkltradingacademy.com. Okay. So I just wanted to kind of cover that. Now I'm going to go ahead and jump into the next quick topic here because these are just some primary things that we need to talk about prior to getting into the real nitty gritty of trading, which is the technical analysis. Now, I'm not starting this topic with as technical analysis, but there are three types of market analysis that you need to be aware of before we get into technical analysis. One is technical analysis itself. That's the map. Think of this as the history brain. It's the study of price charts, patterns, and indicators. Okay. It operates on a belief that everything you need to know is already shown in price action. In reality, it is. Okay. Your goal here is to identify um, trends or lines in the sand, which we call support and resistance. That's the picture I have there to find your entry and your exit points. Okay. Um, so that's what technical analysis is. Just a little quick showmanship here. When I see something bounce off support, you know, sometimes I might take a buy entry right here thinking it's going to ride up to this area here. Okay, so from where I enter to that position there where I exit might be my profit. Okay. I might trade on this bounce here, okay, or this bounce. I might do another entry on a buy, okay, or vice versa. I might sell off a resistance. So these are entry and exit points. These are your lines in the sand, and that's what we're looking to identify. And when we get into technical analysis, we'll go over that. That's why we say it's the history brain, okay, the map. So just keep that in mind. All right. There is also this context. This is the context brain, the fundamental analysis. This is the fuel, the why behind the move. Okay. It could be economic reports. It could be central bank decisions. It could be geopolitical events, oil price fluctuations. All right. Okay. If technical analysis shows you where the price is going, fundamental analysis shows you the engine driving it there, the why. Okay. So in this case, oil is up over $100 a barrel right now at this moment. That's because the geopolitical situation has us there. The Straits of Hormuz are blocked. Less oil is coming out of the Gulf, Persian Gulf over there, or the Gulf of Arabia, whichever you want to call it these days. Okay, but there's less oil coming out of there. So, of course, the demand for oil in the world is on the rise. So, cost goes up. We all know that. Okay. Someday, once I get that open back up, the idea is that supply will grow and then price will go down. Okay. If you remember the supply and demand chart. Okay. So that's the context of the brain fundamental analysis. Now let's talk about sentiment analysis or the mood. Okay, this is the emotional brain. The market is moved by people, and people are moved by fear and greed. Sometimes people will start selling off because they are fearful something is going to happen. Okay. Sentiment analysis gauges if the crowd is too bullish or too bearish on something. By reading the room, you can often spot when a move is exhausted and a reversal is coming. Okay. Uh, so these are just some things you need to watch out for and keep in mind. Now, I want to talk about market analysis for just a minute. It's like a three-legged stool rule. The technical, the fundamental, and the sentiment all make up market analysis. In trading, you can't just rely on one type of analysis. If you have a great technical setup, but a major news event comes in, economic news event, fundamental is about to drop, or the entire market is panicking because of sentiment, your stool's going to collapse. So you need to think about all three of these with your brain. Successful traders use all three to gain confluence. In other words, to gain, a good um, feeling that this is all moving in the right direction before they place that trade. Okay, you want your technical to line up. You want to make sure that fundamentally there is no news announcements coming out, and sentiment is also giving you that confidence or confluence that you need to place the trade. Okay. So it's very key. And then the future brain, quantitative analysis, basically is something that gets into advanced and or intermediate and advanced trading. So beginners can and should stay focused on the first three only at this moment, okay? But you do need to know that there is quantitative analysis out there. This is the world of high-speed algorithms and complex math. It's for completeness now. But as you grow into an advanced trader, you'll see how data-driven models can eventually support your manual strategies. Okay, so keep that in mind. All right. With that said, this is Nate from NMKL Trader and Trading Academy. I hope you enjoyed this quick video on picking the right broker, understanding the three different types of analysis. And what we're going to start to do now at the Academy is dig into, in this course, Trading for Beginners, we're going to start to dig into the technicals of trading. So get ready. In the next few lessons, we're going to dive deeper. We're going to be in trading view. We're going to be doing things that are fun. And so I want you to get ready for that. And I hope to see you in the next lesson. Everybody take care and have a great weekend. Talk to you later.